wanted to actually ask you if we are going to get a higher compounded annual growth rate, more than 15%, because I remember you earlier in this year saying that you expect the Sensex to touch about 2 lakh mark by 2030. And by CAGR calculation, it's 15% from the current levels. But looking at the past 8 odd months, like, 50K to 59K on the Sensex already. And we are looking at, pace of vaccination, economy recovering, earnings getting better, macro factors contributing. Do you think that there is a chance that we could also see a higher compounded rate? And do you think these targets could also be revised upwards?
You don't need this. 15 is a lot. You'll be blessed, I can tell you this. You can't count your money. It is so big. 15 is very large. See, 15 is the market return. That doesn't mean that anybody is stopping you. That's not a ceiling. You can make 30. I'm quite sure when I was young and small and kind of fearless, I must have made about 28, 29%. But now in a larger base, we will make maybe 15 plus minus 2 3%. So clearly, for the early movers, the guys who are coming with few lakhs, few thousands, they will definitely make much more than 15%. If the market gives 15%, I think they'll make more like 20%, 25%.
Okay. And I remember reading your quote somewhere which says, sell your diamonds, but not your stocks. But I want to ask you that what should investors who are sitting on handsome profits over the last 1 year, say some have made 100%, some have made even 500% in some cases in small caps or mid caps, what should they do? And how do you ensure that your need for return is not turning into greed? You know what is the right time to exit and book your profits out.
They don't need your advice and my advice. They're smart guys. I mean, in stock market, success is the most difficult thing, in the sense that once you get success, in the sense that your a crore has become 5 crores or 10 crores or 20 crores, then then the maximum correction can be 30, 40%. So you're sitting on a lot of money, and in the process, you learned it. So I don't think the successful people, they need too much of advice. I think the people who are sitting completely outside of it, outside of the stock market system, they need hand holding and some kind of cajoling. How do you see in a stock market? What do you need? Three things: vision, courage, and patience. So people have. Our job is to show the garden path of what has happened in last 30, 40 years with our experience, and what can happen in next 30, 40 years. So that's the job. Some people get it, some people don't get it. Second, then courage. Having understood, do you have courage to really buy? I can't do anything about it. If you understood things and still don't execute, it's a mistake of omission or whatever. So you have to do that, courage. Then third thing is the patience. Do you remain invested in the market? Good time, bad time. Patience is required, not in good time. Good time, everybody remains invested. It is the patience in the bad time.
Yeah.
Because markets will go up and then by very nature it will come down. When it comes down, don't call up anybody. Just have a drink and go to sleep. So that. So,
That's so cool. I'm sure all the millennial investors are loving this interview.
so you have to have a lot of patience. So long as it's a track which will be not straight, it will be going up and going down. You should be ready for that roller coaster ride, but don't leave the ride. Otherwise, the fun of that roller coaster itself is the fun. So that fun is in the ride. Fun is not in the up or down.
Absolutely. Now, so for you, for someone who's been a true blue value investor, you've advocated always, like, buy good companies, run by good management, available at a good price. But we are in the age of disruption. How are you analyzing these new age digital disruptors like Zomato? Soon we are going to see Paytm, Policy Bazaar. Many of them are at steep valuations. And despite making losses, are they worth investing for the long period from, say, you've been saying 10, 20 years, 30 years from now? At this nascent stage, should one look at investing in these?
Yeah. See, whenever you go to Haridwar in Ganges, it is always cold.
Yeah.
So it is going to be tough in the sense that, but you have to take the dip. You have gone there. You want to make that 12-15% compounded on your savings for many years to come. So that is not possible if you stay out. It's that simple. And there is no right day or wrong day. Every day is the right day. Even if the
Hmm.
markets are high, you have to start your journey. You have to pay your tuition fee. And even if the market goes down by 30, 40% when you buy, say initially you buy a lakh rupees today
Yeah.
and market goes down, okay, fine. At lower end again I'll buy. But I have bought it for 5 years or 10 years. Let me stay on. So that is very important. Nobody can guarantee you that you will not make loss.
Sure.
And that being, see, the whole mindset is I should not make loss, somebody else should make the loss. ये हो ही नहीं सकता ना, ऐसे ही होता है यार.
Yeah. Okay. And going forward from here, is there any particular segments that you are bullish on for the long term, which will be the biggest wealth creators? Of course, during COVID, we've seen the IT sector perform over the last 1 decade. We've seen several, sectors really take the first step or the front row. Banks, talk about autos, talk about all of these sectors. But going forward from here, is it better to stick with the old dinosaurs of the industry? Is it good to stay with the disruptors? What will make money?
Yeah, so what happens is that, I mean, of course, the bulk of the companies remain same,
Hmm.
but in next every year actually, few new companies keep coming. And of course, so in next, say after say 10 years, about
Hmm.
25 to 30% of the value of the market will be new companies. So you don't have to stick to old only, but large portion of your portfolio will be coming from the old companies. And even in the old companies, all of them are not 100 years old or 20 years old. There are
Hmm.
companies which are 5 year old, there are companies which are 10 year old, the companies
Hmm.
which are 20 years old, and there are change of the management in the old companies. So the old companies are looking like new companies.
Yeah.
So you have to build your portfolio looking at everything. Just because a company is new, it is not great, and just because it is old, it is not slow and outdated. No. So in investing, you can have a good mix of as much old, as much new, but it all depends on your understanding of where is the value price gap. Price is
Hmm.
what you pay. Listen to this. Price is what you pay. Value is what you get. And
Yeah.
price and value are not two same thing. And knowing the price has no advantage. Everybody on this earth knows the price. By the nanoseconds, people know the price.
Yes.
Very few know the value. Okay, so the smartness is in trying to understand underlying value of the company. And then the moment you understand some understanding estimated, you think that this company could be worth 1,000 crores or 2,000 crores, but the price
Hmm.
is only 500 crores. Let me buy some. Like that, you start learning then slowly.
Hmm. Okay. If I were to ask you if there are any red flags, big risks that you see to the market journey that we've seen so far, of course, everybody has been saying there's been the correction is long overdue. It may come 5%, 10%. We don't know when. But what are the risk factors that could lead to a correction, if at all, after this journey?
I don't know about the markets. I
Hmm.
cannot I cannot figure out whether market will close today positive or negative. We can't
Hmm.
figure out, and
Okay.
hence I don't for my investing purpose where the market is headed tomorrow, day after. Of course, I want the markets to be higher in
Hmm.
next 5 years time or 10 years time. Yes, without that we also don't make too much of money. But
Hmm.
so that's the market part of it. So I don't bother about on a day-to-day basis how the markets are going to do. And actually, it is not knowable. I firmly believe that nobody can figure out where the market is headed in short term, and hence why bother about it.
Okay.
So I don't time the market. If I get dividend of 10 crores today, I will invest it today only. But if see the time to buy in the market is when you have the money. Time to sell, time to sell your investment is when you need the money. I mean, I'm talking about entry and exit of the market. You must enter the market when you have the money. You exit the market when you need the money. Otherwise, you can keep selling, buying stocks here and there. But broadly, that's what has been practiced by me. I have not
Yeah.
timed the market, so it has given me not only a lot of peace of mind, but also very comfortable compounding of my wealth over a period of time.
Yes, absolutely. And I remember that I heard you on Clubhouse and I wrote an article based on what I had listened to. And a very interesting thing that you had said is not, even if the Brahma, Vishnu, Mahesh Trinity were to come together, not even then one can time the market. So that was something very, very interesting.